And welcome, it's Mary Ellen McGonagle here with your weekly Edge show for Friday, December 1st. Today, as usual, we'll go ahead and take a look at the broader markets and see where did we close for the week and beyond. Despite flat performance among several of the broader market indices, there was quite a bit of outperformance beneath the surface. Also, I'll share with you some of the headline news that drove price action last week. And last up, viewer question of the week. And it's all about taking a look at some of these global areas of the market that are also on the move higher. So first up with the news last week, we did see new home sales fall in October amid higher mortgage rates. Not too surprising there. However, we did get third quarter GDP numbers revised to a 5.2% gain. However, beneath the surface, the numbers did reveal that the economy is cooling as we head into the fourth quarter, which is good news, certainly relative to any potential rate hikes. Household spending for Q3 was revised downward, and that is one of the 8 reasons why there is anticipation that the economy will cool. We did get very impactful inflation data by way of the core PCE that showed that inflation is in fact slowing again. However, Fed Chair Powell's comments on Friday were not jubilant in the sense that he is suggesting that it is very premature at this time to even discuss the possibility of any rate cuts. So that really tempered the market's bullish sentiment. Next week, highly important numbers with November employment data due out, factory orders, and then also consumer sentiment. So from here, let's go ahead and take a look at those markets and see where did we close for the week. And here we are with a daily price chart of the S&P 500. And as you can see, it does remain in a confirmed uptrend, finding support at this upward trending 10-day simple moving average. We do still have a positive RSI and stochastics. However, of note, the rally certainly today did push that RSI back into an overbought position. If we get further into an overbought condition, you will want to use the precedents back here in June and then again in late July to make sure that it is nothing more than a pullback if we do in fact begin to see the markings of that. From here, let's go ahead and take a look beneath the surface at some of these sectors in the S&P 500. This is a 2-month daily price chart view of the 11 sectors, and I have sorted it by this relative strength indicator. And take a look, financials up here at the forefront. The S&P was up about 0.8%, but financials saw a 2.1% gain. Very sharp rally toward the end of the week as interest rates continued to pull back. I'll share with you one of the faster moving groups this past week within the financial sector. We can see that it is in an overbought position, which would signal at some point in time, at the very least, a period of consolidation. But that was up there at the forefront. Also, industrial stocks outperformed up 2.1%. Significant part of that rally, again, taking place today. And a lot of that having to do with transportation stocks, truckers, and so on, airlines, and also other industrial areas that are on the move higher as we anticipate a firm economy going into year end. REIT stocks up here, top performer last week, up 4.4%. This is an area that fares well in a declining interest rate period. Quite simply, these REITs can expand their portfolios by borrowing funds at a lower rate. And we can see this nice new uptrend developing among the REIT stocks. Also up here at the forefront, basic materials, second top performer, up 2.8%. We did see gold getting very close to a new high, and other basic materials names such as steel. A lot of that having to do with the weaker dollar, but also growth overseas that we'll talk about as we progress. And then, of course, you do want to be aware of some of these weaker areas. Energy down here, bottom performer, chopping around in the throes of oil prices continuing to decline. And then one last area I did want to make sure I shared with you is technology. The group was flat for the week. It saw a 0.6% move, so it underperformed the S&P 500, but certainly not out of line given the sharp November advance and a need for this sector to digest that significant move, keeping an eye on this RSI, which is now in an overbought position. Of note is that the stochastics, black line down through the red, could be foretelling, again, to be seen and certainly to be closely watched. Moving along, taking a look at some of the sub-industry groupings beyond these sectors, it's really important that you get a sense of where that relative outperformance is so that you can A, participate in it, and B, also be aware of those areas that are underperforming and make sure that you're not heavily weighted in those areas. So here we are. First up is IGV. This is an ETF for software stocks, up quite a bit this week, yet again, all about strong earnings among many underlying stocks, certainly well-known names this week that went on to be top performers among the NASDAQ. And also moving along, home builders on the move higher with this breakout of a flat base to a new near-term high. Nice high volume. Again, lower interest rates are helping this area. Also, a number of these home builders have reported very solid earnings results and growth prospects going forward. Here's a look at that gold grouping that I talked about, GLD, and you can see how we are hitting a near-term high. We can take a quick look at a monthly chart and share with you that we are very close if we can get above this July high in 2020. And again, taking a look at outperforming areas, retail XRT, the S&P 500 retail ETF, is continuing to advance. Sharp 4% rally today amid strong earnings from some of these underlying companies. And also heading into this holiday season, there's anticipation that we will see strong continued consumer spending. Semiconductors were flat for the week. Again, not out of line. The group was up 16% in the month of November. Certainly due a period of consolidation. Again, keep your eye on that stochastics. If we move negative, you will want to really zero in and make sure that we don't have an RSI that trends below 50, which would be negative for this particular group. Small cap names really on the move. A lot of their gains today, 3%, and a lot of that having to do with the move into bank stocks. And let's take a quick look at KRE, which is the regional banking ETF. This is that area that really helped propel financials up to the forefront with their outperformance, up 5% on the day. There is consensus, or certainly a feeling among investors, that a lot of the problems that stemmed and really forced this area into a very sharp downtrend with that banking crisis is behind them. So we are seeing vibrancy among many of these underlying names in this regional banking group area. Last up, we'll take a look at yields. This is the 10-year Treasury down here, and of course, very good. It did close at a 4.2 level. Like to see that decline in interest rates and REITs. Also, financials and other areas I've been sharing with you do fare well in a declining rate environment. So from here, I did share with you the viewer question of the week, and it was all about taking a look at some of these areas outside of the U.S. that are really trending higher and faring well. So I did want to share with you some ETFs that can be very helpful if you are looking to potentially participate. So let's take a look at INDA. This is the ETF for India. And we can see it has had a very sharp advance. Let's take a look at the chart for INDA, and we can see that it did experience this multi-month base breakout on Thursday on very high volume. The country is going through a significant period of growth, and you can see we had a continuation rally today. While it is overbought, we can go back to prior periods such as May, and you'll see that that overbought condition can remain in place as long as the group remains in a confirmed uptrend. You're in good standing. Likewise with this MACD trending upward, and again, nice high volume. Another area or another country that we can take a quick look at is Brazil, EWZ. There's been quite a bit of vibrancy, Chile and other areas also in South America. And here we are with that ETF and very similar price action with that lengthy base breakout. And in fact, today it did break out of a nice 2-week flat base, nice high volume with positive momentum indicators. Last up, we can take a look at Mexico, EWW, a V-shaped recovery. The ETF was able to recover from a move below this 10-day moving average and back into a nice uptrend. Again, nice high volume characteristics on this buying action over the last 2 days, putting the stock on track for a lengthier base breakout going forward. That's it for this week. Everyone have a great weekend. If you like what you've seen, go ahead and hit that like button, and I'll look for you again here next Friday afternoon. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.